Reportedly joining a list of companies attempting to reduce their reliance on China for chip production. Nikkei writing earlier today, the company aims to stop using chips from China by 2024. Dell also telling suppliers to do the same. Joining us now is Stacy Rascon from Bernstein. Stacy, first of all, is it possible to reduce chip usage from China fully by 2024 at this point?
It's probably possible. You got to remember, they're not buying like CPUs and stuff that are made in China. That stuff's not made there. That's made in the U.S. or potentially in Taiwan if it's from AMD. But it could be memory and like other types of peripheral chips, and there are other sources of those. It's not just chips either. It sounds like they're trying to more broadly move production and other things out of China, which is not new. Like lots of folks in the electronic supply chain have been diversifying supply chains even ever since the tariffs and the trade stuff from the Trump administration a few years ago. But just given what's going on in terms of some of the sanctions and everything else sort of getting placed on China, there does seem to be more of a broad-based decoupling that's starting to happen, and you know they're going down that path.
So I feel like it's kind of the new like zero emissions target. We're going to be out of China by X year on production. What does it mean for the U.S. chip makers? Who stands to benefit most?
Well, it depends on what they're making, right? But like a lot of, like, for example, on the memory side, you've got folks like Samsung and Hynix that have, you know, memory fabs in China that they're not going to be able to support anymore. They've got a waiver right now that they can buy equipment, but who knows how long that's going to last. They're probably going to be moving production out of there anyways. You know, the U.S. guys that are making processors, that'll be Intel and AMD. That's not going to change. You'll just move elsewhere. I don't know. Long story short, I don't know how much of like a shift this is in terms of like winners and losers. It's probably more on memory and other things, and they're probably already buying most of that stuff from non-Chinese suppliers anyways, who happen to be making the stuff in China. So it'll just move. So
semiconductors, as you know, have been volatile. They're cyclical. Yeah. There's concerns about the tech spending and the whole cycle. What stands out as a buy to you amid some of the rubble from last year?
Yeah, you bet. So, you know, you go a year ago this time, sentiment was pretty positive on the space. And, you know, I think 22, from a growth standpoint overall, it's going to be a decent year for semis, but certainly for the stocks, hasn't been that good because the stocks are anticipatory and everybody was anticipating a downturn. I think one positive in some sense, if you want to call it that, is that investors are now widely expecting 2023 to be a downturn year. This is more now on magnitude and timing and degree and duration. What I would be favoring at this point are companies that have already cut, ideally substantially, where there is a good secular story that can play off of that base once investors get confident that numbers have been appropriately reset. In my coverages, it'd be names like NVIDIA, Qualcomm, AMD, maybe even some of the semi-cap players might fit into those categories as well. But those are all names where numbers have come down substantially, where I do think that there is still a good story that exists once investors can get comfortable that numbers have bottomed.